we are starting another seminar under the seminar series organized by the Bank of Ceylon under the NanaJaya program. So today in this section we are discussing about the 8th lesson of the syllabus, public economy. So with a set of questions we will focus on the public economy lesson within the syllabus. Right, we will start the discussion. We will see the first question, which is not a step taken by the government to correct the market failures. So in order to arrive at the answer, we will have a small discussion regarding the market failures. Within the first lesson of the syllabus, we are learning about the various economic systems: free market economic systems, command economic systems, the mixed economic systems, traditional economic systems, are the alternative economic systems that we have already discussed. From these alternative economic systems, we identify a free market economic system as a better performing economy over the other economic systems. We identify the free market economic system as a better performing economy over the other economic systems. But even in free market economic systems, there are some situations where the free market economic model does not achieve the socially desired outcomes. There are some situations where the free market economy does not achieve the socially desired outcomes. So these instances where the free market economy does not achieve the socially desired outcomes are identified as the market failures. The instances where the free market model does not achieve the socially desired outcomes are identified as the market failures. So we identify three major sources of market failures: inefficiencies in resource allocation, inequity in income distribution, and then macroeconomic instability are the three major sources of market failures. So keeping this definition regarding the market failures, we will focus on the question. What do they expect from us in this question, which is not a step taken by the government to correct the market failures? So we discussed about the market failures. So in order to rectify these market failures, correct these market failures, we expect that there should be a certain government involvement to the market operations. We identify the need of a government intervention to the market operations. So therefore we say that the government should take steps to remove inefficiencies in resource allocation in free market model. The government should take steps to create a fair income distribution in free market economic systems. The government should prepare the legal and social framework required for the smooth operation of a free market model. The government should take steps to achieve a higher economic growth and development for a free market model. The government should take steps to establish the macroeconomic stability. Like this, we identify some functions the government should perform in a free market economic model in order to rectify these market failures, in order to correct these market failures. So in this question, they are asking us to identify the step which is not taken by the government to remove these market failures, or in other words, which is not a step taken by the government to correct the market failures. We will go through the answers given. Providing public goods. Non-provision of resources to produce public goods. Non-provision of resources to produce public goods is one major market failure that we identify in a free market economic system. So, therefore, we say that the government should intervene to the market operations and take steps to provide public goods in a free market economic model. Therefore, providing public goods is a step taken by the government to remove the market failures, to correct the market failures. Second one, offering merit goods for free of charge. We define a merit good as a good which create positive externalities in consumption. A merit good is a good which create positive externalities in consumption. We identify an under allocation and under provision of resources to produce merit goods in relation to the free market economic systems. Education is provided by the private sector. Health services are provided by the private sector. But even though the education service is provided by the private sector, even though the health services are provided by the private sector provides those resources to produce those goods or provides those services only for the ones who can pay a price. If someone is unable to pay a price, that respective person does not have the access to those kind of services. But we know that education services, health services are very much important for the well-being of any society. So therefore, we expect that the government should intervene to the market operations and take steps to allocate sufficient amount of resources to produce these kind of merit goods. Sometimes we may be expecting the government to offer education for free of charge, or maybe at some concessionary rates. We may be expecting the government to offer health services for free of charge, or maybe at concessionary rates. Therefore, offering merit goods for free of charge is also a step taken by the government to remove the market failures. And then the third one, charging taxes on demerit goods, charging high taxes on demerit goods. A demerit good is defined as a good which create negative externalities in consumption. Social benefit of consuming demerit goods is less than the private benefit gained by the private consumer by consuming these demerit goods. A person consumes a cigarette expecting some satisfaction for him. If the smoker does not get any satisfaction by consuming a cigarette, that person is not thinking of paying a price and buying the cigarette. As he is getting some satisfaction only, he is willing to pay a price and consume a cigarette. But when that respective person spends some money and consume the cigarette, what happens is, a person who is not directly connected to that respective consumption activity will face for an inconvenience, create negative effects on health, create some inconveniences to the people surrounding to this person. Like this, there are various external costs, created to the third parties due to the consumption of demerit goods. Therefore, we say that the government should intervene to the market operations and take steps to control the resource supply on demerit goods. So, therefore, charging taxes on demerit goods to control the supply of demerit goods is one step which should be taken by the government to control the resource supply on demerit goods. So, that is also a step taken by the government to correct the market failures. So, the first one is a reason to correct the market failure. Second one is a step taken by the government to correct the market failures. Third one is also a step taken by the government to correct the market failures. Fourth one, charging taxes on goods and services which create positive externalities. What do we mean by the positive externalities? Positive externalities refer to the favorable effects created on the third parties due to a production or a consumption activity carried out by some other party of the economy. When someone carries out a certain consumption activity, when someone carries out a certain production activity, if an external benefit is created, that is, if an external benefit, a benefit is created to a third party who is not directly connected to that respective activity, we identify that as a positive externality. We identify that as a positive externality. So, therefore, as a government, the government should take steps to encourage the resource supply on producing these kind of merit goods. Why? When someone is educated, not only that respective person is benefited through that, the third parties are also gaining benefits through the receiving of education of someone, spreading new knowledge over the society, creating an educated labor force to the country, supporting for a well-behaved society, are some external benefits received through education. Like this, when there are positive externalities, as a government, the government should take steps to encourage the resource supply on them. So, if government charge taxes on the goods having positive externalities, those economic activities will be discouraged. If government charges high taxes on health services, the private sector suppliers will be discouraged to supply health services. If government charges high taxes on education services, the supply of education services will be largely discouraged. So, therefore, that is not a step taken by the government to control the externalities, or that is not a step taken by the government to correct market failures. There is an under provision of resources to produce merit goods. There is an under provision of resources to produce goods having positive externalities. So, if government further charges taxes on them, what happens is the supply of them will be largely discouraged, further discouraged. So, therefore, that is not a step taken by the government to control the market failures, to correct the market failures. In addition, instead of charging taxes on the goods which create positive externalities, what should the government do? The government should take steps to encourage the supply of them, offering subsidies, right? Maybe giving various other types of incentives, maybe introducing some tax holidays for them, like this. These kind of steps should be taken by the government to encourage this resource supply on the goods having positive externalities. So, therefore, we should identify the fourth answer as the correct answer for the question number 1, which is not a step taken by the government to correct market failures. Charging taxes on the goods and services which create positive externalities is not a step taken by the government to correct the market failures. We will read the fifth answer as well. Introducing rules and regulations to protect common resources. Actually, that is also a step taken by the government to correct the market failures. The reason is we identify an overutilization of common resources. We identify an overutilization of common resources. So, the government should take steps to protect the common resources, introducing rules and regulations, restricting the entry to the common resources and all. So, therefore, charging taxes on goods and services which create positive externalities is not a reason for the government, or is not a step taken by the government to correct the market failures. Right. second question. All of the following are steps taken by the government to create a fair income distribution except. One major reason for the market failures is high level of income distribution disparities or existence of income distribution disparities, unfair income distribution. People who hold more factors will gain more incomes. The people who hold less factors will gain less incomes. Sometimes some people might be not having some sufficient amount of resources which is needed for a basic living standard even. So therefore, the government should intervene to the market operations and take steps to create a fair income distribution in free market economic systems. Charging progressive taxes, implementing pro-poor growth strategies, means implementing growth strategies in a way that the income levels of the poor people are going up. Offering merit goods like education and health services for free of charge, and then sometimes maybe charging high taxes on luxury goods and releasing taxes on the essential consumable items. So these are the various steps taken by the government. These are the various steps taken by the government to create a fair income distribution. Also offering various subsidies to the low income earners. All these are the steps taken by the government to create a fair income distribution. We will see one by one. From these 5, 4 should be supporting to create a fair income distribution in a free market model, and then one step stated here shouldn't be supporting to create a fair income distribution. First one, implementing pro-poor growth strategies is a step taken by the government to create a fair income distribution. Charging taxes on demerit goods. Over-provision of demerit goods is an inefficiency of resource utilization. Over-provision of demerit goods is an inefficiency of resource utilization. Right? Supplying more resources on producing demerit goods. So, in order to rectify this, the government may be charging taxes on the goods and services which create which create negative externalities, or in other words, the demerit goods. That is a step taken by the government to remove inefficiencies in resource allocation, but it won't be gone under the steps taken by the government to create a fair income distribution. It won't be gone under the steps taken by the government to create a fair income distribution, or in other words, to remove the income distribution disparities. So therefore, answer number 2 is the answer for question number 2. Charging taxes on demerit goods is not a step taken by the government to create a fair income distribution. Instead, it is a step taken by the government. Instead, it is a step taken by the government to remove the inefficiencies in resource allocation. Right. Third question. Which of the following statements is correct regarding the operation of fiscal policy in order to control the inflationary pressure? What do we mean by an inflationary pressure? If there is a pressure on the general price level to go up, maybe because of increasing the aggregate demand for goods and services, or sometimes maybe because of increasing the cost of production. If there is a pressure for the prices of goods and services to go up, we identify that as an inflationary pressure. We identify that as an inflationary pressure. So therefore, the government should take steps to control the growth of aggregate demand, or in other words, the government should take steps to reduce the aggregate demand in order to control an inflationary situation. The government should take steps to reduce the aggregate demand in order to control an inflationary situation. And to the other way, what do we mean by the fiscal policy? The fiscal policy is the economic policy used by the government in order to operate the government revenue, in order to operate the government expenditure, in order to operate the public debts with the view of achieving the macroeconomic objectives. So therefore, the major fiscal policy tools are the taxation, government expenditure and public debts. So here, what do they expect from us? Which of the following statements is correct regarding the operation of fiscal policy in order to control an inflationary pressure? So therefore, the answer that we are identifying should be an answer which is leading for a reduction in the aggregate demand, and it should be done by using the fiscal policy tools, taxation, government purchases and then the public debts. First one, increase both government purchases and taxes. If government purchases are increased, that leads for the aggregate expenditure to go up. So that is not controlling the inflation, instead it is supporting for an inflation. So therefore, the first answer should be rejected. Second one, increase government purchases and interest rates. There are two issues in this answer. One is, if government purchases are increased, that leads for the aggregate expenditure to go up in one hand, and on the other hand, the interest rates is not a fiscal policy tool, instead the interest rate is a monetary policy tool. So therefore, the second answer also cannot be accepted. Third, decrease government purchases. If government purchases are decreased, that leads for the aggregate expenditure to go down. The aggregate expenditure comprises of consumption expenditure, investments expenditure, government purchases and then net exports. So if government purchases are decreased, that leads for the aggregate expenditure to go down. So therefore, decreasing government purchases is supporting for controlling the inflation, and that is a fiscal policy tool as well. And then increase in interest rates. Again, as I told you in the previous answer, interest rates is a monetary policy tool and not a fiscal policy tool. So therefore, the third answer also cannot be accepted as a correct answer. Fourth one, increase income taxes. Yes, when income taxes are increased, the disposable income of households will go down. Their purchasing power decreases, therefore that leads for the aggregate expenditure to go down. And then decrease in money supply. Decreasing money supply is supporting for the aggregate expenditure to go down. But then money supply is not gone under the fiscal policy and it is a monetary policy instrument. So therefore, the fourth answer should also be rejected. Fifth one, decrease government purchases and increase the income taxes. Yes, it is. We should accept the fifth answer. If government purchases are decreased, that leads for the aggregate expenditure to go down. We discussed it previously. And if income taxes are increased, the disposable income of households will go down, and therefore the aggregate expenditure will go down. So therefore, answer number 5 is the answer for question number 3. We'll read the fourth question. When consumption of a certain good generates negative externalities, which of the following must be true at the market equilibrium? Right? We'll read the question once again. When consumption of a certain good generates negative externalities, right? If a consumption activity creates a negative externality, we should identify that as a negative externality in consumption. If a consumption activity creates a negative externality, we identify that an external cost, we identify that as a negative externality in consumption. So we will use a diagram to explain this. Again, we will read the question once again. When consumption of a certain good generates negative externalities, that is, the question is talking about the negative externalities in consumption. Which of the following must be true at the market equilibrium? Right. So when there are negative externalities in consumption, the consumption activity being considered creates an external cost. Therefore, the demand curve based on the marginal social benefit will be less than the demand curve based on the marginal private benefit when there are negative externalities in consumption. The demand curve based on the marginal social benefit will be less than the demand curve based on the marginal private benefit when there are negative externalities in consumption. Why is it? Because of the negative externalities, because of the external cost created through the consumption activity being considered. When we are discussing about the externalities in consumption, we assume that there are no externalities in production. When there are externalities in consumption, we assume that there are no externalities in production. Therefore, the supply based on the marginal private cost is equal to the supply based on the marginal social cost. The market resource allocation is always based on the marginal private benefit and then the marginal private cost. Market resource allocation is always based on the marginal private benefit and then the marginal private cost. Always the resource allocation through market is based on the private cost and the private benefit. External costs and the external benefits are disregarded by the market participants. External costs and the external benefits are disregarded by the market participants. But we say that the socially optimum resource allocation should be based on the marginal social benefit and then the marginal social cost. The socially optimum resource allocation should always be based on the marginal social benefit and then the marginal social cost. So, the demand curve based on the marginal social benefit, the supply curve based on the marginal social cost are intersecting with each other at this point. Therefore, the socially optimum price is P2 and then the socially optimum quantity is Q2. Socially optimum price is P2 and then the socially optimum quantity is Q2. Right. So, if we go back to the question, what do they expect from us when the consumption of a certain good generates negative externalities? So, we drew a diagram to show the negative externalities in consumption. Which of the following must be true at the market equilibrium? So, see, this is the market equilibrium. Market equilibrium price is P1, market equilibrium quantity is Q1. Market equilibrium is always based on the marginal private cost and the marginal private benefit. Market equilibrium is always based on the marginal private cost and then the marginal private benefit. So, therefore, the market equilibrium marginal private benefit at the market equilibrium is this much, and the marginal social benefit at the market equilibrium is this much, because this is the quantity which is traded in the market. So, the gap between these two curves is identified as the marginal external cost. Why do we identify a marginal external cost there? Because the consumption creates negative externalities. There is an external cost. When someone carries out the consumption activity being considered, a person who is not directly connected to that respective activity has to face for an inconvenience, has to bear a cost. So, because of this, the marginal private benefit of consumption is less than the marginal social benefit of consumption at the equilibrium output level when there are negative externalities in consumption. So, we will go back to the question, right? And another thing that you need to be aware is whenever we are talking about externalities in consumption, we should compare the private benefit of consumption and then the social benefit of consumption. We should compare the private benefit of consumption and then the social benefit of consumption. But when we are analyzing the externalities in production, we should compare the private cost of production and then the social cost of production. So, therefore, right, as we showed on the diagram, the marginal private benefit of consumption is greater than the marginal social benefit of consumption when there are negative externalities in consumption, right? We'll go to the answers. Marginal social benefit is less than the marginal private cost. That is wrong. As I told you, when we are analyzing externalities in consumption, we should compare the private benefit of consumption and then the social benefit of consumption. We should compare the private benefit of consumption and then the social benefit of consumption. As the consumption activity being considered creates a negative externality and external cost, the social benefit is less than the private benefit. Second answer, marginal social benefit is greater than the marginal private benefit. That is also wrong. Third, marginal social cost is greater than the marginal private benefit. Wrong. Why is it? In the third answer, they are comparing social cost and the social benefit. Wrong, I told you that when we are analyzing the externalities in consumption, we should compare the private benefit and the social benefit. Fourth one, marginal social benefit is less than the marginal private benefit. Yes, it is. We should identify the fourth answer as the answer for this. We discussed with the diagram that when there are negative externalities in consumption, the private benefit of consumption is greater than the social benefit of consumption, or in other words, the social benefit of consumption is less than the private benefit of consumption. So the answer number 4 should be identified as the answer for question number 4. Right, question number 5. Which of the following is most likely to be a reason for what economists call the phenomenon of government failure? At the beginning of the discussion, I explained you that the free market economic systems might lead for the market failures, and we discussed about some market failures too. So in order to rectify these market failures, in order to correct these market failures, we identify the need of a government involvement. We identify the need of a government involvement to the market operations to correct these market failures. But these kind of interventions of government to the market operations in order to correct these market failures may lead for further inefficiencies in the economy, due to the inherent drawbacks of the government sector, wastage and corruptions, delays in decision making, high level of political interest, high level of political influences, political self-interest. All these are identified as the reasons for government failure. What do we mean by the government failure? The government interventions to the market operations to correct market failures may create further inefficiencies in the economy, due to the inherent drawbacks of the government sector. So, what do they expect from us? Which of the following is most likely to be a reason for what economists call the phenomenon of government failure? So, we want to identify a reason which is supporting for a government failure. First one, negative externalities that result from the production of some goods and services is a market failure and not a government failure. Second one, excessive consumption of demerit goods is also a market failure and not a government failure. Third one, unequal distribution of income and wealth is also a market failure and not a government failure. Fourth one, imperfect competition in the markets is also seen as a market failure and not a government failure. Therefore, the fifth answer, the pursuit of self-interest among the politicians, or in very straightforward way we can identify this as the political self-interest. So, the political self-interest is an example for a government failure. Right. So, therefore, the answer number 5 should be accepted as the answer for question number 5. we will move on to the question number 6. Which of the following is true of the marginal cost of providing a private good to one more consumer? So what do we mean by a private good? We define a private good as a good which has the two characteristics of excludability and rivalry. What do we mean by the excludability? The consumption of these by one consumer reduces the availability of the consumption of a good can be excluded if someone does not pay a price for that respective good. What do we mean by the excludability in consumption? If the producer has the ability of removing the consumption of a good or a service for the people who do not pay a price, and if the producer has the ability of limiting the consumption of it only for the one who pay for it, we identify that as the excludability. So with the concept of excludability, we are just identifying the ability of the producer to remove the consumption of the people who do not pay a price. Ability of the producer to remove the consumption of the people who do not pay a price. We do not look at the fact whether the producer is currently actually charging a price or not here. We only look at the fact whether the producer has the ability of removing the consumption of the people who do not pay a price or not. That is what is meant by the non-excludability in consumption. And what do we mean by the non-rivalry? Non-rivalry refers to the consumption of these by one consumer does not reduce the availability of the same to the others. To the other way, what do we mean by the rivalry? Rivalry refers to the consumption of this respective good reduces the availability of the same to the others. Consumption of this good to one consumer by one consumer reduces the availability of the same to the others. Now for an example, if there are 10 loaves of bread and if one consumer consumes a loaf of bread, 9 more loaves of bread are available in the market. So a private good is a good which is excludable in consumption and rival in consumption. A private good is a good which is excludable in consumption and then rival in consumption. So therefore, what does the question ask? Which of the following is true of the marginal cost of providing a private good to one more consumer? Marginal cost is the additional cost incurred to, like here they are talking about providing a private good to one more consumer. So marginal cost of providing a private good to one consumer means whether the producer has to incur an additional cost. Whether the producer has to incur an additional cost when a private good is supplied to one additional consumer. Yes, a private good is excludable and rival means what? Especially the private goods are rival means what? The consumption of these by one consumer reduces the availability of the same to the others. Therefore, producer will have to bear an additional cost when these are supplied to one additional consumer. Therefore, there is a marginal cost to the producer when these private goods are supplied to one additional producer. Therefore, the marginal cost of producing and supplying a private good to one consumer is positive. There is a marginal cost to the producer. Therefore, there is a positive marginal cost when the private goods are produced and supplied to one additional consumer. Right. Question number 7. The principal sources of tax revenue in Sri Lanka are, right, recently if you look at the recent past, especially 2019 and 20. Excise tax takes the highest contributor, is the highest contributor to the total tax revenue of the government. Income tax and the value added tax are the next two major contributors to the total tax income of the government. So therefore, excise duty, the highest contributor to the total tax revenue of the government, and then income tax and then value added tax are the three major contributors to the total government tax revenue within the recent past. So therefore, the first answer itself should be taken as the answer for question number 7. Excise duties, value added tax and income tax are the three major components or are the three major contributors to the total tax revenue of the government. So answer number 1 is the answer for question number 7. Question number 8. An appropriate fiscal policy to combat a recession would be an increase of. An appropriate fiscal policy to combat a recession would be an increase of. What do we mean by a recession? An economic recession is defined as a continuous fall in the level of income and the level of employment of an economy for a period more than few months. An economic recession is defined as a continuous fall in the level of employment, level of income of an economy for a period more than few months. So during a recession, what exactly happens is the aggregate demand for goods and services go down. Due to the fall in aggregate demand for goods and services, the level of production of the economy decreases, the level of employment of the economy goes down, the unemployment of the economy increases. So these are the effects of an economic recession. In this question, they want us to identify an appropriate fiscal policy to combat a recession, that is to overcome from a recessionary situation. We will see. Interest rates is not a fiscal policy tool. Instead, interest rate is a monetary policy tool. Money supply is also a monetary policy tool and not a fiscal policy tool. Therefore, we cannot identify any of these two as the answers. Third one, increase of taxes. So if taxes are increased, what happens is, as we previously discussed, the aggregate demand will go down. If taxes are increased, the aggregate demand will go down. But in order to overcome from a recession, in order to correct a recession, overcome from a recession, the government should take steps to increase the aggregate demand. The government should take steps to increase the aggregate demand. So therefore, as a result of increasing taxes, what happens is aggregate demand decreases, and therefore that cannot be taken as a step to correct the market failures. Instead, it would be a factor which is leading for the aggregate demand to further go down. Fourth one, sale of government bonds. So sale of government bonds is also not gone under the fiscal policy instruments. Why? As I previously told you, the fiscal policy comprises only of the government revenue, especially the taxation, government expenditure, and then the public debts. Right? So therefore, sale of government bonds also cannot be taken as a step taken by the government to overcome from a recession. But the last answer, increase of government spending, as I already told you and as we are aware, the aggregate expenditure comprises of consumption expenditure, investments expenditure, government purchases, and then the net exports. These are the components of aggregate expenditure. So if government purchases are increased, that leads for the aggregate expenditure to go up. If government purchases are increased, that leads for the aggregate expenditure to go up. So therefore, increasing government purchases is the step which should be taken by the government to overcome from a recessionary situation. So answer number 5 should be taken as the answer for question number 8. Question number 9. What do you mean by horizontal equity of government taxation? So, we identify some characteristics which should be able to identify in a good tax system. From them, equity refers to charging taxes based on the paying ability of people is identified as the principle of equity. We further divide the principle of equity into two categories as the horizontal equity and then the vertical equity. We divide the principle of equity into two categories as horizontal equity and then the vertical equity. Charging equal taxes from the people having equal paying abilities is identified as the horizontal equity. And then charging different taxes from the people having different paying abilities is identified as the vertical equity. Charging equal taxes from the people having equal paying abilities is identified as the horizontal equity. And then charging different taxes from the people having different paying abilities is identified as the vertical equity. So, if two people who are having the same incomes are charged with the same tax, then the horizontal equity is there. But if two people having the same incomes are charged with two different taxes, the horizontal equity is not there. Also, when one person is earning 50,000 rupees a month and if the other person is earning some 100,000 rupees per month, if both of these two people are charged with a tax of rupees 1000, the vertical equity is not there. So, when the person with 50,000 is charging a tax of rupees 1000, maybe the person who earns an income of 100,000 is charged with a tax of rupees 2000 to assure the vertical equity. So, treating equal people equally is identified as the horizontal equity and treating different people differently is identified as the vertical equity. So, we will go through the answers. Charging same percentage of tax from all taxpayers is not what horizontal equity means. Charging a higher tax rate from the high income earners is also not the horizontal equity. And then charging the same percentage of tax from the people having equal economic abilities is what we identify as the horizontal equity. Therefore, answer number 3 should be taken as the answer for question number 9. Charging the same percentage of tax from the people having equal economic abilities is identified as the horizontal equity of charging taxes. Right. We will move on to the next question. Expenditure component which is not identified under the current expenditure of government. Based on the economic classification of government expenditure, we divide the government expenditure into 3 categories. Based on the economic classification of government expenditure, the government expenditure is divided into 3 categories: current expenditure, capital expenditure, and lending minus repayments, or in other words, net lending, are the 3 categories of government expenditure based on the economic classification of government expenditure. From them, the current expenditure is further divided into 3 categories as expenditure on goods and services, current transfers and subsidies, and then the interest payments. So, what do they expect from us here? Expenditure component which is not identified under the current expenditure of the government. Expenditure on goods and services is a component of current expenditure of government. Interest payments is a component of current expenditure of government. Current transfers to households is a component of current expenditure of the government. Salaries paid to public sector employees is also a is also a component of current expenditure of the government. But then the 5th one, salaries paid on private sector employees cannot be taken under the current expenditure of government. It is anyway not related to the government current expenditure or any other expenditure. Therefore, the fifth answer should be taken as the answer for question number 10. Right, we will move on to the question number 11. Which of the following does not indicate a market failure? So, again we discussed a little about the market failures at the beginning of the discussion. The market failures are the instances where the market mechanism, the price mechanism does not achieve the socially desired output. There are three major sources of market failures: inefficiencies in resource allocation, inequity in income distribution, and then the macroeconomic instability. So, here which of the following does not indicate a market failure? Existence of monopolies is gone under the inefficiencies of resource allocation. Overutilization of common resources is also treated as an inefficiency in resource allocation. Non-provision of public goods is also gone under the inefficiencies of resource allocation. Therefore, 1, 2 and 3 are fallen under the inefficiencies of resource allocation, and therefore they are market failures. But then the fourth one, wastage and corruptions, is not a market failure. Instead, wastage and corruptions is what we identify as a government failure, is a state failure. So therefore, the question, which of the following does not indicate a market failure? The fourth one, wastage and corruptions, is a government failure and not a market failure. Therefore, answer number 4 is the answer for question number 11. We will move on to the question number 12. If an industry ignores the external cost it generates in its production. So, a production activity creates an external cost means what? A production activity creates an external cost means what? The question is talking about a negative externality in production. If a certain production activity creates an external cost, we identify that as a negative externality in production. Right? We identify that as a negative externality in production because the production activity being considered is creating an external cost. So, which of the following will be true at the competitive market equilibrium? So, again we will draw a diagram and see what kind of a market equilibrium situation can be seen in relation to the goods having negative externalities in production. In relation to the goods having negative externalities in production. So, when we are talking about externalities in production, we assume that there are no externalities in consumption. Therefore, private demand curve based on marginal private benefit is equal to the demand curve based on the marginal social benefit. So, when there are negative externalities in production, the social cost is greater than the private cost. Therefore, supply based on the marginal social cost is less than the supply based on the marginal private cost when there are negative externalities in production. When the social cost is getting high, the supply based on the social cost is getting low when compared with the supply based on the private cost. Supply based on the social cost is getting when the social cost is getting high, the supply based on the social cost is less than the supply based on the private cost. So, therefore, when there are negative externalities in production, the supply curve based on the marginal social cost is lying on the top of the supply curve based on the marginal private cost. As we already discussed, the market equilibrium is based on private benefit and the private cost. That intersection takes place at this point. Price is P1, quantity is Q1. But then the socially optimum equilibrium should be based on the social cost and the social benefit. The intersection takes place at this point. Price is P2, quantity is Q2. Price is P2, quantity is Q2. So, you can see market price is P1 and market quantity is Q1. So market quantity is more than the socially optimum quantity, therefore we identify an overproduction through market when there are negative externalities in production. So the market equilibrium quantity is more than the socially equilibrium quantity or socially optimum equilibrium quantity. And then market price is P1, whereas the socially optimum price is P2. So market price is less than the socially optimum price, and then market equilibrium quantity is more than the socially optimum quantity. So we will go to the question, price will be greater than the marginal social cost. The actual price is P1. Marginal social cost of producing this is P2. So there the price is less than the marginal social cost, therefore the first answer is wrong. Price will be less than the marginal social cost. See, marginal social cost is P2, but the price in the market is P1. So therefore price is less than the marginal social cost. So therefore answer number 2 should be accepted as the answer for question number 12. Price will be less than the marginal social cost. This is the actual price which is traded in the market or which is charged in the market. P1 is the actual price which is charged in the market, whereas the socially optimum price is P2, or in other words the social cost of production is P2. So therefore the market price is less than the socially optimum price when there are negative externalities in production. So we should accept the second answer as the answer for question number 12. We should accept the second answer as the answer for question number 12. Question number 13. Free rider problem can be seen in. What do we mean by the free rider problem? The free rider problem means, in other words, the non-excludability in consumption. If the producer do not have the ability of removing the consumption of the people who do not pay a price, if the producer does not have the ability of removing the consumption of the people who do not pay a price, even if the ones who do not pay a price are still having the ability of consuming the product, we identify that as a free rider problem, or in other words the non-excludability in consumption. Therefore the free rider problem, or in other words the non-excludability in consumption, is seen in the common resources and in the public goods. Public goods are non-excludable and non-rival. The common resources are non-excludable but rival in consumption. But both of those two goods are non-excludable in consumption. Therefore, free rider problem can be seen in the public goods and the common resources. So, answer number 5 should be accepted as the answer for question number 13. Question number 14. Market may fail regarding the provision of public goods because a public good is defined as a good having the two characteristics of. A public good is defined as a good having the two characteristics of non-excludability in consumption and then non-rivalry in consumption. A good having the two characteristics of non-excludability in consumption and then non-rivalry in consumption is what we identify as a public good. Right? If the producer does not have the ability of removing the consumption of the people who do not pay a price, we identify that as the non-excludability in consumption. To the other way, what do we mean by the non-rivalry in consumption? If the consumption of these by one consumer does not reduce the availability of the same to the others, we identify that as the non-rivalry in consumption. So, therefore, why the markets are not providing the resources to produce public goods? Why are we unable to identify a resource allocation to produce public goods? because of the non-extrudable nature of the public goods. Because of the non-extrudable nature of the public goods only, we are identifying the difficulty of allocating resources, providing resources to produce public goods in free market economic systems. Right? So, therefore, we will see they can be consumed collectively. That is, in other words, they are talking about the non-rivalry in consumption. They are provided by the government, maybe because of because of the fact that the market is not providing the public goods. The government will have to involve in supplying the public goods, but it does not mean that it is the reason for the market failure seen here. Because of the non-extrudable nature of the public goods only, the public goods are not provided through the market. They have a zero opportunity cost. No, they are also economic goods which are produced by using the scarce resources. Therefore, we cannot say that there is a zero opportunity cost in relation to the public goods. For those who do not pay a price cannot be excluded from the consumption. Exactly. The non-extrudability in consumption means what? The people who do not pay a price cannot be excluded from the consumption. Because of this only, the private sector producers are not engaged in the supply of the public goods. So, therefore, the fourth answer, those who do not pay a price cannot be excluded from the consumption, is the answer for question number 14. Question number 15. The largest component of current expenditure of Sri Lankan government at present is. So, we already learnt about the components of current expenditure of government. We already learnt about the components of current expenditure of the government. What are those? The expenditure on goods and services, the interest payments, and then the current transfers. The major subcomponent we identify under the expenditure on goods and services is the salaries paid to the public sector employees. The salaries paid to the public sector employees. So, therefore, salaries paid to the public sector employees is the major component we identify in relation to the expenditure on goods and services. So, from them, the highest value given on or highest expenditure is incurred on interest payments from the total current expenditure of the government. In the recent past, the interest payments on the government loans obtained from both the domestic sources as well as the foreign sources are taking a considerably very high value. So, it is even more than the salaries paid to the public sector employees. So, therefore, the highest contributor or highest expenditure is incurred on interest payments. Answer number 4 should be taken as the answer for question number 15. Expenditure incurred on interest payments is the highest expenditure incurred on or the highest expenditure component which can be seen under the current expenditure of the government. So, therefore, answer number 15 is the answer for question number answer number 4 is the answer for question number 15. Next question. Given below are some goods which satisfy human wants: road signals, expressways, public transport service, environmental protection programs. Which of the following shows public goods from the above goods? What do we mean by a public good? We define a public good as a good having the two characteristics of non-extrudability in consumption and then non-rivalry in consumption. A good having the two characteristics of non-extrudability in consumption and then non-rivalry in consumption is what we identify as a public good. So, road signals are non-extrudable and then non-rival. Expressways are extrudable. At the moment, they are actually extruded. That is, only if we are paying a price we can get the service. and if you are not paying a price, we won't get the service. So therefore, an expressway is excluded, actually it is excludable and non-rival in consumption. So that is an example for a semi-public good. Public transport service. Just because the term public is there along with the name of the good, we cannot identify that as a public good. Actually, when it comes to the public transport service, in one hand it is excludable and on the other hand it is rival. Excludable and rival. In one hand it is excludable, on the other hand it is rival. So as it is excludable and rival, we should identify that as a private good, even though the term public transportation service is there. Environmental protection programs. So when it comes to the environmental protection programs, when someone carries it out, the benefits of environmental protection program are there for everyone who lives in that environment. Whether someone pays a price, whether someone contributes for this or not is not material for that. Therefore, the public goods that can be identified here are road signals are non-excludable and non-rival. Expressways are excludable and non-rival, so that is not a public good. Therefore, public transportation service is excludable and rival, so therefore that cannot be taken as an answer. 5. Environmental protection programs is non-excludable and non-rival, so therefore A and D, that is answer number 3rd, should be identified as the answer for question number 16 as the examples for public goods. Next question. An example for a semi-public good is, as we discussed in the previous questions too, a semi-public good is a good having the two characteristics of excludability and then non-rivalry. Excludability and then non-rivalry. What do we mean by the excludability? The producer has the ability of removing the consumption of the people who do not pay a price. Producer has the ability of removing the consumption of the people who do not pay a price if it is a good which is excludable. The producer has the ability of restricting the consumption of them only for the ones who pay a price. To the other way, the semi-public goods are non-rival in consumption up to the point of reaching the maximum capacity. If you are taking a library and if it has some 1000 sheets, up to the point of occupying the 1000 sheets, the library is non-rival. But if all 1000 sheets are occupied, from that point onwards the library might become rival. So therefore, a good which is having the two characteristics of excludability and then non-rivalry is what we identify as a semi-public good. Healthcare services is a merit good and therefore it is a private good. Environmental conservation is a public good, we even identified it in the previous answer. Atmosphere is a public good, non-excludable and non-rival. Forests are a common resource, it is non-excludable but rival in consumption. But public parks is the example that we can identify here for a semi-public good. A public good park is non-rival in consumption but it is excludable. The producer has the ability of removing the consumption of the people who do not pay a price for this. Therefore, answer number 5 should be taken as the answer for question number 17. We will move on to the next question. The balance remaining after deducting total current expenditure of the government from the total revenue of the government is the total government revenue, that is tax revenue plus non-tax revenue minus the total government expenditure. total government revenue minus the total government expenditure gives us not the total government expenditure, actually if you see this carefully, balance remaining after deducting the total current expenditure of the government from the total government revenue. Right, from the total government revenue, when the total current expenditure is deducted, the remaining figure is identified as the current account balance of the state budget. In other words, this current account balance of the state budget is also identified as the government savings. Current account balance of the state budget is also identified as the government savings. So therefore, answer number 5 should be taken as the answer for question number 18. Current account balance is obtained by deducting the current expenditure of government from the total government revenue. So this current account balance of the state budget is also identified as the government savings. Right. Next question. A pure public good is essentially the one. Right. A pure public good is essentially one. As we already discussed, a pure public good is a good which is having the two characteristics of non-excludability and then non-rivalry. The producers do not have the ability of removing the consumption of the people who do not pay a price of these, whereas the consumption is rival. Consumption is non-rival. What does it mean? The consumption of these by one consumer does not reduce the availability of the same to the others. So therefore, we will go through these answers. Which is provided exclusively by the public sector at price below the opportunity cost. Wrong, right? We cannot charge a price from the consumers of the public goods. Which is provided exclusively by private sector. No, private sector does not engage in the supply of public goods because of the non-excludable nature. Which is provided both private sector and public sector. No, they are not supplied at a price. For consumption of which does not deny its consumption by others is the answer. Answer number 4 should be taken as the answer here. Why is it? The consumption is non-excludable and the consumption is non-rival. From them, actually what is given in the fourth answer is the non-rivalry in consumption. So non-rivalry in consumption is one characteristic that can be observed in a pure public good. So answer number 4 is the answer for question number 19. Question number 20. Which of the following indicates a contractionary fiscal policy? What do we mean by a contractionary fiscal policy? If the fiscal policy instruments, the taxation, the government expenditure are used in order to contract the aggregate demand, we identify that as a contractionary fiscal policy. So, in order to decrease the aggregate demand, the government purchases should be decreased. In order to decrease the aggregate demand, the taxes should be increased. So, those are the contractionary fiscal policies, therefore, PVC. An increase in tax rates and a decrease in government spending. Exactly, yes. If government purchases are decreased, that supports for the aggregate demand to go down. And if taxes are increased, that is also leading for aggregate demand to go down. So therefore, the answer which shows a contractionary fiscal policy is the first answer, increase in tax rates and a decrease in government spending. So answer number 1 is the answer for question number 20. Right, we will move on to the question number 21. Charging different taxes from the people having different economic abilities is identified as, actually we discussed it in a previous question. If different taxes are charged from the people having different paying abilities, we identify that as the vertical equity of charging taxes. Charging different people, treating different people with different taxes is what we identify as the vertical equity. So therefore, the question is talking about the vertical equity. So we should identify the answer number 2 as the answer for question number 21, vertical equity. As we already discussed, what do we mean by the vertical equity? Charging different taxes from the people having different paying abilities is identified as the vertical equity. 22nd one, the marginal social cost of allowing one more person to use a pure public good is. Again, we already learnt about pure public goods. A pure public good is a good having the two characteristics of non-excludability and non-rivalry. Due to the non-rival nature of pure public goods, the consumption of pure public goods, the consumption of these by one consumer does not reduce the availability of the same to the others, and therefore the producer does not have to bear a marginal cost when these pure public goods are supplied to one additional consumer. So therefore, the marginal social cost of allowing one more person to use a pure public good is 0. Why? The producer does not have to incur an additional cost when these pure public goods are supplied to one additional consumer. So therefore, marginal social cost of allowing one more person to use a pure public good is 0. Question number 23. If you carefully go through this diagram, you can see that the demand curve, which is based on the marginal social benefit, is lying on the top of the demand curve, which is based on the marginal private benefit. That is, in other words, according to this diagram, the marginal social benefit is greater than the marginal private benefit. We discussed with the previous question that we are comparing the marginal private benefit and then the marginal social benefit. We are comparing the marginal private benefit and then the marginal social benefit when we are analyzing the externalities in consumption. When we are analyzing the externalities in consumption only, we are comparing the private benefit of consumption and then the social benefit of consumption. So therefore, when there are positive externalities in consumption, the consumption activity being considered creates an external benefit. Due to the external benefits created through the consumption activity being considered, the social benefit of consumption will be greater than the private benefit of consumption. Why is it? When there are positive externalities in consumption, right, the private consumer who carries out the consumption activity gains a benefit. That is, there is a marginal private benefit. In addition to that, the third parties who are not directly connected to this respective consumption activity will gain a benefit. That is, there is a marginal external benefit. The total of these two is identified as the marginal social benefit. The total of these two is the marginal social benefit. Therefore, the marginal social benefit is greater than the marginal private benefit when there are positive externalities in consumption. The marginal social benefit is greater than the marginal private benefit when there are positive externalities in consumption. So therefore, we will analyze the answer. Socially optimum output is point A. That is wrong, because socially optimum output should be based on marginal social benefit and then the marginal social cost. So that is B and not A. 2. Situation of a negative externality in consumption. Wrong. We identified that there is a marginal external benefit here. Then only the marginal social benefit can be greater than the marginal private benefit. So therefore, the second answer also cannot be accepted here. third one, situation of a negative externality in production. No, again the social benefit is greater than the private benefit. So again the fourth, situation of a positive externality of production. If it is a positive externality of production, they should compare the private cost of production and social cost of production. In very simple terms, there should be two supply curves and one demand curve. Here we identify two demand curves and one supply curve. So therefore the fourth also cannot be accepted, but then a situation of positive externality in consumption is the correct answer here, as the demand based on the marginal social benefit is greater than the demand based on the marginal private benefit. The social benefit of consumption is bigger than the private benefit of consumption. So therefore answer number 5 should be accepted as the answer for question number 23. Question number 24. The following illustration shows the externality adjusted market outcome that demonstrates the optimum level of output. So the supply based on the social cost is given here. The demand based on the marginal social benefit is bigger than the demand based on the marginal private benefit. So the demand based on the marginal social benefit is greater than the demand based on marginal private benefit means what? The question is talking about positive externalities in consumption. The question is talking about positive externalities in consumption, right? So we will see what they are expecting us to identify. Right, we are supposed to compare the Q2 Q1 output gap and AB gap. So here the market equilibrium quantity is based on private benefit and the private cost. So the intersection is here, therefore this is the market equilibrium quantity. The socially optimum equilibrium should be decided based on the social cost and the social benefit. The intersection takes place at this point, therefore Q2 is the socially optimum equilibrium. As the market equilibrium is less than the socially optimum equilibrium, we identify here an under allocation of resources. As this is talking about a consumption activity, we can identify this as an under consumption. We can identify this as an under consumption. So at this output of Q1, which is actually traded in the market, the marginal social benefit is greater than the marginal private benefit. Why is it? Because of the marginal external benefit. Because of the marginal external benefit only, the marginal social benefit is greater than the marginal private benefit. So therefore we will, based on this, we will move on. Therefore there is a marginal external benefit in one hand, right, and also there is an under consumption or an under allocation of resources through market. So we will move on to the question. We observed an under consumption, so the first answer is talking about an under consumption, but and at the same time there is an external benefit too, right? So we identified an external benefit there because the social benefit is bigger than the private benefit. So the first answer itself can be taken as the answer. There is an under consumption in the market and there is an external benefit here. Question number 25. Which of the following best describes the counter-cyclical fiscal policy of the government? So we already learned what is meant by a counter-cyclical policy, no? But what do we? We already learned about the fiscal policy. We learned that the fiscal policy refers to the economic policy which is used to operate the government revenue and then the government expenditure in order to achieve the macroeconomic objectives. But then what do we mean by a counter-cyclical policy? what do we mean by a counter-cyclical policy? Any step taken by the government or some other entity. We will here look at the fiscal policy. So, it is operated by the government. So, any step taken by the government to overcome from a certain problem at the moment, right, is identified as a counter-cyclical fiscal policy. Now, if there is a recession, the aggregate demand decreases. No? If there is a recession, the aggregate demand decreases. To overcome from a recession, what should the government do? To overcome from a recession, what should the government do? The government should take steps to increase the aggregate demand. Should increase government purchases, should cut down taxes. These are the things which should be done by the government to overcome from a recession. To the other way, to overcome from an economic expansion, what should the government do? What do we mean by an economic expansion? Aggregate demand increases, level of employment increases, the general price level goes up, there might be a huge inflation in the economy, right? So, to overcome from this problem, what we should do? Should take steps to control the aggregate demand, cutting down government purchases, increasing taxes are the counter-cyclical fiscal policies to overcome from an expansion. So, 25, which of the following best describes the counter-cyclical fiscal policy of the government? First one, when there is an economic recession, the government must be decreased, government expenses must be decreased. Wrong. Because if there is a recession, to overcome from that, the government purchases should be increased. Second one, when there is an economic recession, both government expenses and taxes must be increased. That is also wrong. When there is a recession, in one hand government purchases should be increased, but on the other hand the taxes should be decreased. Third, when there is an economic expansion, both government expenses and taxes must be decreased. That is also wrong. In order to overcome from an expansion, the government expenses should be decreased and then taxes should be increased. 4. When there is an economic expansion, government expenses must be increased. That is wrong, because if there is an expansion, to overcome from this, the government purchases should be decreased. 5. When there is an economic recession, government expenses must be increased. Yes, it is, because if there is a recession, to overcome from this, the government purchases should be increased. And then taxes must be decreased. Yes, it is. If taxes are decreased only, we can take steps to increase the aggregate demand. So, therefore, answer number 5 should be taken as the answer for question number 25. Which of the following best describes the counter-cyclical fiscal policy of the government? When there is an economic recession, the government expenses must be increased and taxes must be decreased. Right, we will move on to the next question, question number 26. As a characteristic of a good tax system, certainty means we identify some major characteristics which we should be able to identify in relation to a good tax system. Equity, economy, convenience, or in other words simplicity, certainty, economic efficiency, or in other words neutrality, and then flexibility are the characteristics we identify in relation to a good tax system. Are the characteristics we identify in relation to a good tax system. Right? So, from them, what do we mean by the principle of certainty? The principle of certainty says that the tax system of the country should not be suddenly changed. Tax system of the country should not be suddenly changed. What does this mean? The principle of equity says that the tax system of the country should not be suddenly changed, so that the taxpayer should be able to easily pre-plan the amount of tax he is going to pay in the future. Taxpayer should be able to easily pre-plan the amount of tax he is going to pay in the future. Now, for an example, say a person is now taking steps to import a car, right? Say with taxes and all, everything, the price of a car, price of this specific car is 4 million rupees. So he orders the car. Say it takes 2 months time to arrive the car to the Sri Lankan ports. After 2 months, or within this 2 months period, the government introduces a tax revision on motor vehicle imports, and say as a result of it, the price of this motor vehicle has gone up to 5 million including taxes. So this is something which is very much unexpected by the taxpayer. So sometimes he might not be able to even pay the tax and buy the vehicle, because maybe his maximum budget was some 4 million rupees. Therefore, the principle of certainty says that the tax system of the country should not be suddenly changed. The tax system of the country should not be suddenly changed. Right? So, therefore, we will go one by one. People who earn equal incomes should pay equal taxes. That is not what the principle of certainty means. 2. Taxpayers should be able to easily understand the tax system. That is actually the principle of simplicity, or in other words, the convenience. Third one, an imposed tax system should not be suddenly changed. As we discussed, what do we mean by the principle of certainty? The principle of certainty says that the tax system of the country should not be suddenly changed. The principle of certainty says that the tax system of the country should not be suddenly changed, so that the taxpayer can easily pre-plan the amount of tax he is going to pay in the future. Also, we say that when the tax system of a country is certain, the tax evasion will be at a low level. So, this is what we identify as the certainty as a principle of the good tax system. Right. Answer number 3 for the question number 26. So, we will move on to the next question. Right, we'll read the question. All of the following situations represent inefficiencies in resource allocation through market, except. So, there are some major instances we identify as inefficiencies of resource allocation through market. The market does not provide resources to produce public goods, so non-provision of public goods, less provision of merit goods, over provision of demerit goods, and then the externalities in general are not taken into consideration through market resource allocation, overutilization of common resources, and then imperfect information. All these are the examples for the inefficiencies in resource allocation. So, in this question, they are expecting us to identify a situation where, or which is not an exception to the which is not an inefficiency of resource utilization, or which is not an inefficiency of resource allocation. First one, non-provision of resources to produce public goods is an inefficiency of resource allocation. Second one, over provision of resources to produce demerit goods over provision of resources to produce demerit goods is also an inefficiency of resource allocation in free market economic systems. And then under provision of resources to produce merit goods, is also an inefficiency of resource allocation through market. High level of income distribution disparity is also a market failure. High level of income distribution disparity is also a market failure. But then that cannot be taken under the inefficiencies in resource allocation. High level of income distribution disparity is another market failure apart from high level of income distribution disparity is another market failure apart from the inefficiencies in resource allocation. We previously discussed that inefficiencies in resource allocation, inequity in income distribution, and then the macroeconomic instability are the inefficiencies in resource allocation. Are the market failures. Right? So, from them, under the topic of inefficiencies in resource allocation, we are identifying non-provision of resources to produce public goods, over provision of resources to produce demerit goods, under provision of resources to produce merit goods, externalities are not considered, imperfect information, imperfect competition are the inefficiencies in resource allocation. So, therefore, the high level of income distribution disparity is another market failure, and that cannot be taken under the inefficiencies in resource allocation. Therefore, answer number 4 is the answer for question number 27. Right, we will move on to the question number 28. When there are positive externalities in consumption, what do we mean by the positive externalities in consumption again? If a consumption activity carried out by one party of the economy, creates a benefit to a third party who is not directly connected to that respective consumption activity only, we identify that as a positive externality in consumption. So, the one who carries out the consumption activity gains a benefit through that, and third party who is not directly connected to this respective consumption activity is also gaining a benefit through this respective consumption activity. When someone is receiving education, that respective person is getting some good qualifications, getting a good job, getting a good salary, increasing the living standard of them. All these things can be seen. These are the benefits directly gained by the party who carried out that respective consumption activity. Right? But then, as a result of this respective consumption activity, as a result of receiving education, it may be creating an educated labor force to the country, new knowledge may be spreaded over the society, right? So, these kind of external benefits are also created through the consumption of education. Therefore, the social benefit of consumption is greater than the private benefit of consumption when there are positive externalities in consumption. So, we will see when there are positive externalities in consumption. First one, private benefit is equal to the social benefit. Wrong. Right, we learned that when there are positive externalities in consumption, in one hand there is a private benefit. The party who carries out that respective consumption activity gains a benefit. At the same time, a third party who is not directly connected to this respective consumption activity is also gaining a benefit through this respective consumption activity. That is, there is an external benefit. So, the total of these two is what we identify as the social benefit when there are positive externalities in consumption. So, therefore, social benefit of consumption is greater than the private benefit of consumption when there are positive externalities in consumption. Social benefit of consumption is greater than the private benefit of consumption when there are positive externalities in consumption. So, with this we will go through the answers. Private benefit is equal to the social benefit, it is wrong. Private benefit is greater than the social benefit, that is also wrong. There is an under consumption through market. So, we will see. So, this is what we can see when we are comparing social benefit and the private benefit. As we already discussed, when there are positive externalities in consumption, the demand which is based on the marginal social benefit is greater than the demand which is based on the marginal private benefit. The demand which is based on the marginal social benefit is greater than the demand which is based on the marginal private benefit when there are positive externalities in consumption. When we are talking about the externalities in consumption, we assume that there are no externalities in production. So, the supply based on the marginal private cost is equal to the supply based on the marginal social cost. Why is it? When we are analyzing the externalities in consumption, we assume that there are no externalities in production. So, therefore, the supply based on the marginal private cost is equal to the supply based on the marginal social cost. The market resource allocation is based on the private benefit and the private cost. So, the market resource allocation is decided at this point. The price is P1, the quantity is Q1. But the socially optimum resource allocation should be based on the marginal social benefit and then the marginal social cost. That intersection takes place at this point. The price corresponding to that is P2, the quantity corresponding to that is Q2. Price corresponding to that is P2 and then the quantity corresponding to that is Q2. So, what does it mean? The market resource allocation is less from the society's optimum point of view when we see. Therefore, we identify an under consumption through market when there are positive externalities in consumption. So, we will go to the answers. Private benefit is equal to the social benefit is wrong. Private benefit is greater than the social benefit, that is also wrong. We proved that the social benefit is greater than the private benefit. Third, there is an under consumption through market. There is an under consumption through market. That is also that if you go back to the page and the graph that we drew, you can see here we identified an under consumption through market when there are positive externalities in consumption. So, therefore, the answer number 3 should be accepted as the answer for question number 28. There is an under consumption of resources through market when there are positive externalities in consumption. Right, we will move on to the question number 29. All of the following cause for a state failure exit. state failure is another term for government failure. We already discussed. The government intervention to the market operations is expected to correct the market failures. In order to correct the market failures, we are identifying the need of government interventions to the market operations. Right? But when the government intervenes to the market operations to correct the market failures, may create further inefficiencies in the economy, The government intervention to the market to correct the market failures may create further inefficiencies in the economy due to the inherent drawbacks of the government sector. So, therefore, the state failures here are political self-interest is treated as a state failure, high level of administrative cost is a state failure, wastages and corruptions is a state failure. But then the fourth one, the non-provision of public goods is not a state failure. Instead, the non-provision of public goods is a market failure. The public goods are not provided through the free market because of the non-excludable nature of the public goods. So, therefore, the non-provision of public goods is an example for a market failure and not a reason for the government failure. So, the answer number 4 should be treated as the answer for question number 29. Right. Question number 30. Common resources are. Right. What do we mean by the common resources? We define the common resources as the natural resources which are non-excludable to the beneficiaries but are rival in consumption. Right? What do we mean by the common resources? Common resources are the natural resources which are non-excludable to the beneficiaries but are rival in consumption. Now, if you take a forest, to the people who are living around this forest, maybe like they can easily or freely get the access to the forest. Maybe there are entry points and all for a forest or some kind of forest area. But like if you look at the people living around the forest, like it is not something which is possible or easy to put up a fence all around the forest. No? So, therefore, for the people who are living around the forest, the access or the consumption is non-excludable. But the use of these and the pollutions created by the people over the time will lose the availability of same resource to the future generations. Right? So, fisheries resource in the sea, a river, forest are some examples for the common resources. Therefore, So, therefore, the common resources, the characteristics we identify in relation to the common resources are the non-excludable to the beneficiaries but are rival in consumption. Non-excludable to the beneficiaries but are rival in consumption. So, therefore, rival and excludable, no, that is seen in private goods. Non-rival and excludable, no, that is in semi-public goods. Non-rival and non-excludable is seen in pure public goods, and then rival and non-excludable is the characteristic we identify in relation to the common resources. Therefore, the answer number 4 should be treated as the answer for question number 30. non-rival and non-excludable is the characteristic we identify, are the two characteristics we can identify in relation to the common resources. Now we will move on to the question number 31. The good which exhibits the characteristics of non-rivalry and non-rivalry and excludability is non-rivalry and excludability. So we already discussed about semi-public goods in a previous question. A semi-public good is defined as a good having the two characteristics of excludability. What does this mean? Whenever it says excludability, it is not something which is essential for that good to be offered at a price. Now for an example, in the usual roads, we are now going for free of charge now. Usually the government is not charging a price for the use of usual roads, right? For highways and all, they might be charging a price. But for the usual roads, they don't charge a price at the moment. Right? They don't charge a price at the moment. Right? But if the government wants to charge a price, they can do that, no? If the government wants to charge a price, they can do that. How can? They can say, like if you are using the road, you need to pay this much per year and get a certificate, and that certificate should be there with you whenever you are using the road. If not, you will be charged with a certain penalty. So therefore, semi-public goods are excludable. When say excludable, it is not something which is necessary to charge a price at all the times. They might be currently charging a price sometimes. They might be not charging a price as well. Only thing is, the producer has the ability of charging a price from the consumers of the semi-public goods when it is excludable. But the semi-public goods are non-rival up to the point of reaching the maximum capacity. Until the capacity level is reached in relation to a semi-public good, the consumption is non-rival. The consumption of it by one consumer does not reduce the availability of the same to the others. But once the full capacity is reached, the consumption may be rival. When the full capacity is reached, the consumption may be rival. So therefore, the good which exhibits the characteristics of non-rivalry and excludability is, the question is talking about a semi-public good. Clock towers is an example for a pure public good which is non-excludable and non-rival. A forest is an example for a common resource which is which is non-excludable but rival. Third, a loaf of bread is an example for a private good which is excludable and rival. Fourth, national defense is an example for a pure public good which is non-excludable and non-rival. But then the last one, a road is the example for a semi-public good. A road is excludable, that is, the producer has the ability of charging a price, and it is non-rival in consumption. Right, we will move on to the next question, the question number 32. Primary account balances. When it comes to the state budget, the overall budget balance shows the difference between the total government income including grants and then the total government expenditure. Overall budget balance shows the difference between the total government income including grants and then the total government expenditure. So when a certain economy is showing a continuous budget deficit, when an economy is showing a continuous budget deficit, again when an economy is showing a continuous budget deficit, to see whether this is because of the current inefficiencies of the government or else because of the previous loans that they have obtained, we are calculating the primary account balance. The primary account balance is calculated to see whether the budget deficit is because of the current inefficiencies of the fiscal operations or else because of the loans they've obtained in the past. So therefore, when it comes to the primary account balance, the primary account balance is calculated to see if there is nothing called interest payments to the government debts. If there is nothing called interest payments to the government debts, what kind of a difference is there between the government income and the government expenditure? Right? If there is nothing called interest payments to the government debts, to see what kind of a difference is there between the government income and the government expenditure only, we are calculating the primary account balance. So we will see total government revenue minus total government expenditure is not what we identify as primary account balance. Overall deficit minus loan repayments is actually the net cash deficit. Tax revenue minus total government expenditure is not something which is used to calculate a concept. But the fourth answer, total government revenue including grants minus total government expenditure excluding interest payments. Total government revenue including grants minus total government expenditure excluding interest payments is what we identify as the primary account balance. So therefore, if the primary account balance is showing a surplus, it is representing a situation the government is having a sufficient income to pay off the interest payments on the debts that they have obtained. So therefore, primary account balance is the total government revenue including grants minus the total government expenditure excluding interest payments. We will move on to the question number 33. If consumers of a certain country consume the good X more than the expected quantity, right? Good X is consumed more than the expected quantity, an overconsumption. We identify an overconsumption in relation to the demerit goods. The level of consumption created through market in relation to the demerit goods is greater than the level of consumption created through market in relation to the socially optimum quantity of consumption. Market equilibrium quantity is greater than the socially optimum level of consumption in relation to the demerit goods. So therefore, if good X is consumed more than what is needed to be consumed from society's optimum point of view, that is, there is an overconsumption in relation to the good X, the good X should be a demerit good, and then good Y less than the expected quantity of the society. So good Y, what is consumed in the market, is less from the society's optimum point of view, is less from the society's optimum point of view. What is consumed in the market for good X is less from the society's optimum point of view. So therefore, right, therefore an underconsumption is identified through market, an underconsumption is identified through market when the good being considered is a merit good. So therefore, good X should be a demerit good and good Y should be a merit good. So therefore, the answer number 2 should be identified as the answer here. Good X is a merit good and then good Y is a demerit good. Right. Question number 34. When production of a certain good generates negative externalities, which of the following must be true at the market equilibrium? When production of a certain good generates negative externalities, which of the following must be true at the market equilibrium? So, production creates negative externalities. That is, in other words, the question is talking about negative externalities in production. As we already discussed, when there are negative externalities in production, the production activity being considered creates external costs. Therefore, supply based on marginal social cost is less than the supply based on the marginal private cost when there are negative externalities in production. The demand curve based on marginal private benefit and the marginal social benefit are equal to each other. Why is it? When we are talking about externalities in production, we assume that there are no externalities in consumption in order to simplify the complicated practice. The market equilibrium is decided at the point where the marginal private benefit and the private cost are intersecting with each other. So, therefore, market equilibrium price is P1 and the market equilibrium quantity is Q1. But from society's optimum point of view, when we see, the socially optimum equilibrium should be decided at the point where the marginal social benefit and the marginal social cost are intersecting with each other. So, this is the socially optimum equilibrium price and this is the socially optimum equilibrium quantity. So, what is produced in the market is more from society's optimum point of view. Therefore, there is an overproduction through market when there are negative externalities in production. There is an overproduction through market when there are negative externalities in production. So, marginal social benefit is less than the marginal private cost. Wrong, we should compare the private cost and social cost. Marginal social benefit, they are talking about the benefit, therefore we should reject it. Third, marginal social cost is greater than the marginal private cost. Correct, we discussed that when there are negative externalities in production due to the external cost created through the production activity being considered, the marginal social cost is greater than the marginal private cost. Right. Question number 35. Economic tax burden refers to, right? We divide the tax burden of a certain tax into two as the statutory tax incidence or the statutory tax burden and then the economic tax incidence, or in other words the economic tax burden. The statutory tax burden refers to the party who bear the legal liability of paying the tax to the government. The legal liability of paying the tax to the government. The party who bear the legal liability of paying the tax to the government is what we identify as the statutory tax burden. In other words, this is the party on whom the tax is imposed by the government. But to the other way, what do we mean by the economic tax burden? The economic tax burden refers to the change occurs in the real income of individuals due to a tax. The change occurs in the real income of individuals due to a tax. In other words, the economic tax incidence identifies the party who bear the actual tax burden of a certain tax. So, therefore, the change occurs in the real income of individuals due to a tax. The second answer is the answer which talks about the economic tax burden. So, answer number 2 is the answer for question number 35. Right, we move on to the next, 36. According to their relative importance in total expenditure, the main components of recurrent expenditure of Sri Lankan government can be ranked as: the highest value of government expenditure is gone for interest payments on public debts. The second highest is gone on the salaries and wages, and then the next one is gone for current transfers to households. Right? So therefore, interest payments, salaries and wages, the transfers to households. Second answer is the answer for question number 36. Right. Question number 37. When a regressive income tax is in operation, right, what do we mean by a regressive tax? A regressive tax is defined as a tax where the percentage of tax gradually decreases along with the increase in the level of income. That is, when the tax base gradually goes up, when the rate of tax, the percentage of tax gradually decreases, we identify that as a regressive tax. Here what we actually look at is not the amount of tax but the percentage of tax only we identify here. So therefore, the level of income increases, the percentage of tax goes down. Means the poor people are paying a higher percentage of tax, and when the people are getting rich, their percentage tax goes down. So therefore, poor pay a larger percentage of their income in taxes than the rich. Because again, what do we mean by a regressive tax? A regressive tax is a tax where the tax percentage gradually decreases when the level of income increases. Therefore, the poor pay a higher percentage of tax of their income than the rich. So therefore, the answer number 5 should be taken as the answer for question number 37. Question number 38. The diagram below shows the market demand and supply curves of a merit good. To increase consumption from OQ1 to OQ2, the government could. Now, if it's a merit good, what do we actually mean by a merit good? A good which creates positive externalities in consumption. Right? When the market resource allocation is Q1, it says that the socially optimum resource allocation is Q2. In order to sell Q2, producer is expecting P3 price. If the producer receives P3 price only, he is willing to supply Q2 quantity. But consumer is willing to pay only P1 price in order to buy Q2. So consumer is expecting it at P1 and producer is expecting a price of P3. So therefore, this P3 P1 gap should be subsidized by the government. If the government offers this gap to the producer only, the consumer will be able to buy it at P1, producer will be receiving P3. So therefore, the answer should be tax the producers, no, wrong. Subsidize the producers by P3 P1 gap, we discussed it. Then only the producers are supplying Q2 and the consumers are buying Q1. So therefore, answer number 2 should be taken as the answer here. Right. Assume that the market provides a merit good without any intervention from the government. Compared to the socially efficient outcome, this means that, so you have to compare the market equilibrium price and the socially optimum equilibrium price in relation to a merit good. A merit good is a good which creates positive externalities in consumption. So therefore, the demand based on marginal social benefit is greater than the demand based on the marginal private benefit when it comes to a merit good. The supply based on marginal private cost and the marginal social cost. Market equilibrium is decided at the point where private benefit and private costs are equal to each other. So therefore, market equilibrium price is P1, market equilibrium quantity is Q1. But the socially optimum equilibrium is decided at the point where the marginal social benefit and the social cost are intersecting with each other. So the market equilibrium price, the socially optimum price is P2, and then the socially optimum equilibrium quantity is Q2. Right? So the market equilibrium quantity is less from the society's optimum point of view, and then the market equilibrium price is less from the society's optimum point of view. So therefore, market price is too low, and the market quantity is also too low. Right? So see, market price is too low and the market quantity is also too low. Right. Therefore, the answer number 4 should be the answer for question number 39. Question number 40. The expression that the marginal cost of consuming a pure public good is 0 or public good is 0. What does it mean? As we discussed, the marginal cost refers to the cost borne by the producer to produce the product and supply it for one additional consumer. Marginal cost of supplying a pure public good is 0. Why is it? It is non-rival in consumption. Any number of consumers can consume it without paying a price. Just because one additional consumer is added to the total number of consumers, the consumption of the others will not be sacrificed. Therefore, the marginal cost of consuming a pure public good is 0 means that the producer does not have to bear an additional cost when these are supplied to one additional consumer. So, therefore, answer number 5, there is no additional cost to provide a public good for an additional consumer. Answer number 5, there is no additional cost to provide a public good for an additional consumer is the answer for question number 40. The expression that the marginal cost of consuming a pure public good is 0 means that there is no additional cost to provide a public good for an additional consumer. So, with this set of questions, we were going through, or we were revising the 8th lesson of the syllabus, public economy. So, we focused on different areas of this lesson with these multiple choice questions. So, think you got an overall understanding regarding the 8th lesson, the public economy. So, with this, the questions, the 40 MCQs that we discussed are like covering the whole lesson in a certain way. So, think this was a useful discussion for you on your exam. So, we will meet on the next day with another lesson, right? So, thanking for Bank of Ceylon for giving me this opportunity to contribute for this NanaJaya program. We will meet on the next session focusing on another lesson. So, thank you very much for